today's video, we're going to talk about Medicare, specifically the amount that you pay for your Medicare Part B premium. Many people don't know that when you're in retirement and taking Medicare as your health insurance benefit, the amount you pay for that Part B premium can change depending on the amount of income that you have. So that Medicare premium surcharge can have a huge impact on your healthcare costs throughout retirement. And you may not be aware of the things that can impact that. So we're going to break it down, look at the brackets, and talk about the rules that apply so that when you're making financial planning decisions in retirement, you can understand how to avoid those higher charges and maximize your retirement. So on this chart, we're looking at the different income brackets for Medicare Part B. If you have income above a certain level, you will have to pay an additional amount for your monthly Medicare Part B premium. In addition to that, if you're a single filer, you have your own set of brackets, and if you're married filing jointly, you have a second set of brackets. So how does this work? If your income is above a certain level, then depending on where you fall, you'll have to pay these additional amounts. So let's take a look at the brackets first, and then we'll go into some more detail. So for example, let's go with someone who is married filing jointly. If your modified adjusted gross income, which is basically, if you want a shorthand for it, take your AGI and then add back in some of the tax preferential items like the non-taxable portion of Social Security or tax-free interest. So add those back in, and that's how you're going to get to your modified adjusted gross income. So looking at this right now, if that number is below $194,000, you're just going to pay the lowest amount for Medicare Part B. But if it's above that, if it's between $194,000 and $246,000 in 2023, for each person in the household, you would pay an extra $78 a month. Okay, so going down, you can see, it's pretty straightforward how this works. If you're between 246 and 306, each person pays an extra 196 and so forth, all the way up to if your income is above $750,000 a year, each person is going to be paying an extra $472 a month for their Medicare Part B coverage. So you might notice here that between married filing jointly and single, these brackets are quite a bit different. So I guess this would lead me to the first example of where this ends up catching people. When someone is retired and let's say your spouse passes away, you're going to go in the following year from being from filing as married filing jointly to single. And so let's say that while your spouse is still alive, you're earning $150,000 a year in retirement. Well, at that number, you're comfortably in the lowest bracket for Medicare Part B premiums. But as a single tax filer, you're not only going to go over the first level, you're going to be at the top of the second level and be paying an extra almost $200 a month for your Medicare Part B premium. So this is just something to be aware of. And in my opinion, this is just such a travesty that this happens after someone has lost their spouse, that they get kind of this extra thing that happens and they gotta pay extra Medicare. It doesn't make any sense. So the way that Medicare determines your income for purposes of calculating this increase to your premium is they look at your income from 2 years ago. So in 2023 for Medicare, they would be looking at your income from 2021. So another time that this catches people is when they are in their first years of retirement. It's pretty common that before someone retires at the end of their career, that might be the highest income years of their life. So, you have high income and then all of a sudden you get 2 years, you get into retirement, and your health care costs are going to be based off of, the earnings that you had from a couple years ago. Even if on a go-forward basis into retirement, your income level is not going to be, is not going to be at that same level. So it's just something to be aware of when you're making tax planning decisions, or you're just figuring out your healthcare costs in retirement. Another time that I see retirees get caught having to pay these extra Medicare, the Medicare surcharge, is they make a let's call it a proactive financial planning decision, like doing a Roth conversion. So they read a blog or they learn about Roth conversions, or somebody they're working with, some professional says, hey, you should do this for whatever reason. So they take money out of an IRA, they convert it into a Roth. Now all of a sudden that extra income, stacks on top of their other income, and they end up going over one of these brackets and end up having to pay, they get a love letter from Medicare 2 years later that they're going to have to pay a higher Medicare Part B premium. So it may not actually stop you from doing that decision, that to do a Roth conversion, for example. But before you do something like that, it's not only incumbent upon you to look at the income tax side of things, but also understand that you may have an extra health insurance cost because of that decision. Now, a third example where I see people get caught with this is when you make maybe a financial decision that it wasn't maybe like a proactive planning decision like a Roth conversion, but it was just something you were doing and you just didn't realize that there was going to be this additional consequence. So let's say that you sold a piece of real estate, or you had some capital gains in your portfolio and you sold some investments. Or what if you had some gambling winnings, right? And so in any of these scenarios, you have kind of this, you're in a situation where you have this windfall of additional reportable income. And many people who this happens, and all of a sudden 2 years later they find that they have to pay that extra higher amount for Medicare because of that. So I bring all this up, first of all, just to make you aware that this is something that happens, but then also when you make a financial decision in retirement, before you do anything, this is what's so important about either taking the time to become educated and learn about this stuff, or work with a good, competent professional who can understand how all these various aspects of your retirement actually connect together. So when we're talking about making a tax planning decision, most, maybe your accountant doesn't realize that that's going to impact your Medicare Part B premiums, right? All these different aspects of your retirement end up tying together in ways that you may not have realized. So as you can see, the decisions that you make from a financial planning standpoint, whether you do a Roth conversion or not, whether or not you sell that asset, like a piece of real estate or something in your investment portfolio, the amount of income that you have or don't have can have a huge impact on how much you pay for your Medicare Part B premium. This is also something that comes into effect, like we said, when if you're married and your spouse passes away, going from a married filing jointly status down to a single taxpayer status changes the brackets completely and can have a really negative impact on your healthcare costs as a widow or widower in retirement. All of this is to say that when you're in retirement, many different areas of your life interplay with each other, and so that's why it's important to be aware of the rules and look at ways that you can plan ahead, plan smart, and make the best decision in retirement. I'll catch you next time.